Now, what Abra's done, because we've registered this new advisory with the SEC, we're now offering separately managed accounts where you're not pooling the assets together anymore.
Hmm.
And so this has basically now the benefit that it's legal in all 50 states. And to my knowledge, we're the only company right now in the US that can even provide staking in all 50 states, or lending for that matter, against crypto holdings.
This content is brought to you by BitGo, which is one of the top crypto custodians in the crypto industry. BitGo works with many big companies and brands, such as Pantera Capital, Bitstamp, and Bitcoin IRA. Nike also selected BitGo to power its wallets for its NFTs. And BitGo has many great services, such as hot wallets, custodial wallets, self-managed cold wallets, and NFT wallets. Many institutions trust BitGo with its top-level security and incredible services such as being able to deploy your capital while it's in custody, which includes lending, borrowing, trading, staking, DeFi access, and more. If you'd like to learn more about BitGo, please visit bitgo.com, link in the description. Welcome to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. With me today is Bill Barhydt, who's the co-founder and CEO of Abra. Bill, great to have you back on.
Hey, good to see you, man. How's things?
Bill, great. And I'm always excited when I'm speaking to you because kind of what I told you the past two times I've interviewed you, I'm a big fan. Obviously your Web 1.0 pedigree, you're now here building in Web 3. So I always appreciate your perspective and thoughts on the market. And there's some huge news around Abra, the launch of Abra Private and Prime. Tell us about this.
Sure. So coming out of what's kind of transpired in the crypto space the last 4 years, obviously we went through this big boom and bust in lending and yield, and we took some very valuable lessons from that. If you look at the companies that aren't here anymore, most of them were, not necessarily even the ones that were had good intentions that failed, right? A lot of them had significant concentration risk. The bottom line is that clients became a liability on those companies' balance sheets. And when those companies went bust, the depositors had to fight and still are fighting to get their assets back.
Right.
Okay. And the question became, okay, people want to have a place where they can invest in crypto, earn yield, stake for proof of stake assets, potentially borrow against their crypto holdings, which we believe is going to be one of the fastest growing aspects of crypto, but they don't want to take counterparty risk to these lending companies. Now, DeFi addresses those issues, which we can get into, but it's way too complex
Mm.
for the average investor to navigate themselves. So what we did is we started an SEC registered investment advisory that got permission to launch staking, yield, lending services within a safe, separately managed account structure for the first time. And this SMA model that we launched is very common in equities and even in crypto, but it's not common for staking, earning yield, borrowing. It's actually very complicated to give people exposure to DeFi, to borrow, to earn yield, to stake, where you're not actually taking counterparty risk to Abra. And that's what people want. Like I said, they want the benefits of DeFi, but they don't want to deal with the complexity of DeFi,
Right.
right? And so that's what we've built with Abra Private. Abra Private is basically an SEC registered investment advisory that allows you to invest, stake, earn yield, borrow, or even just hold crypto in a safe, separately managed account. It's like you getting your own vault, almost like a safety deposit box
Mm.
from which you can deploy into specific investments, but Abra is not the counterparty. So if Abra goes away, you still have your assets. Okay. Abra Prime is our institutional offering that allows hedge funds, mining networks, crypto ATM networks, venture capitalists to have OTC trading access, derivatives, spot, calls, options, structured products, lending, borrowing in a highly professional environment. Our head of options trading, for example, was at Goldman running the options trading for them in crypto. We've got a DeFi team and quant team there that's been working on yield and lending for years. We've got a spot liquidity desk now that's been servicing miners and managing auto liquidations for Bitcoin miners for quite a while. So there's a lot of expertise on our desk on the prime side of the business that is doing a great job of servicing institutions. And so now we have this private wealth business and prime business that kind of complement each other and actually service each other in many ways.
Hmm. So, Bill, I have a ton of questions on there because there's many layers to this. With regards to the private,
Yeah.
I, and this is a rookie question. We got the SEC targeting Kraken and Coinbase and so forth regarding their staking
Mhm.
services. So, what's the difference with your service being that it's
Yeah.
SEC registered?
Great question. So here's my understanding. I can speak very well to what we're doing. I think I can kind of speak to what they're doing and what the issues are. I'll
Mm.
start off with the basics, which is to say, if you want to stake Ethereum or Solana or another proof of stake assets, I think there are 15 to 20 states in the US where you simply can't do it on an exchange. The exchange will block you, and based upon where you are, your ID or where your computer is located when you try to do it, because they're fighting with those states who consider staking to be a security offering when it's done via a centralized exchange.
Ah.
Okay. Now, it doesn't really matter what I believe, whether I believe that that's legal or whatever. The only thing that matters is that that's the reality is that in those states you can't stake. Okay. Now, what Abra's done, because we've registered this new advisory with the SEC, we're now offering separately managed accounts where you're not pooling the assets together anymore.
Mm.
And so this has basically now the benefit that it's legal in all 50 states. And to my knowledge, we're the only company right now in the US that can even provide staking in all 50 states or lending for that matter against crypto holdings without you going to a DeFi network and using MetaMask on your own. And even that's, some people are claiming that that's might be like, money transmission or security offering. I don't know. I don't agree with any of that. It doesn't matter what my opinion is.
Right.
All I know is we've worked very hard with our lawyers over the last year to do this in a way that we're very comfortable works for our clients.
Mm. Um, so Bill, if you don't mind me asking, because I want to make sure I wrap my head around this. So it's not so much the asset that's being staked, but rather the nature or the infrastructure behind it. So if it's like you said, a centralized exchange, that's what's triggering the securities law.
I think so. It seems to be the case, right? So the commonality there is the states have this opinion that, or several states, like California being the biggest, that staking via a centralized or pooled exchange model is a security offering. I don't necessarily agree with that. It doesn't matter, my opinion.
Sure.
My opinion's irrelevant. What matters is that's their opinion, and as a result, in many states, I think it's like California, Washington, Hawaii. I don't know the list. I can't memorize it. But if you try to stake, it won't let you.
Yeah, same thing happened to me here in New Jersey. I got blocked and I got my services turned off. Um, So, Bill, I'm going to go back to, the way Abra is structured now with this, which I love, by the way. This absolutely makes sense, and I think is the way forward because of, man, I have PTSD for what happened in 2022 and all these collapses. So, you said you're eliminating counterparty risk, and is it because the assets are on chain versus you custodying them directly? So if Abra goes out of business, the user no nothing happens to the
Yeah,
fund.
that's basically right. So there's two parts to this. The first part is there a counterparty to the transaction,
Hmm.
right? When you stake, you don't want a counterparty to the transaction. You don't want to become someone else's liability. Meaning when you deposit your cash at a bank, you are now a liability on the bank's balance sheet. Why? Because they have to pay you back at some point. When you deposit into an SMA account, a separately managed account, you are not a liability on my balance sheet. I am not a counterparty to the transaction. So if Abra goes away, It's still your SMA. And you can see that when you make a deposit to do custody, you can see the assets on chain.
Mm,
That's part one. Part two is you're deploying directly to stake, directly from the SMA into that staking pool, whatever it is. May not use the right terms, but you're staking directly, meaning you may be pushing buttons and using APIs that we provide, but you're doing it directly to the network. The counterparty is the internet,
mm.
right? So like the counterparty is the staked contract. The counterparty is the DeFi protocol, depending on what you're doing.
Wow. Um, Bill, are you guys the first to do it this way?
I'm quite confident that we are. It's very hard.
Mm,
So I think about what we've gone through. First of all, just to survive this mayhem. Let's put that aside, right? That nobody cares. It's my problem. But to have the legal understanding, we had to lawyer up multiple firms. We had to rebuild our platform from what we had with the old retail app, which doesn't work in the US anymore. Everybody has to use this model now.
mm,
So to go from retail trader and borrow to Abra private trader and borrow was a complete rework from an architectural perspective. And it's still a work in progress. We're adding more capabilities to get back to parity with what we had with the app, but using this separately managed account model, right? So we're getting close. You can do most of what we had before, but not everything. And my goal this year is to have all of that back in place and then eventually have an app again, but one step at a time. And so it's hard. It was very hard, and it continues to be hard. We have ongoing compliance issues. We're now an SEC registered investment advisor, which brings a whole set of requirements to the company, compliance training and oversight and audits. And again, most viewers may not care about this, but the rules are the rules, and we care, right? And so we've gone very deep to follow those rules.
wow. So I guess my next question is with the specific assets. So let's say Ethereum, you need 32 ETH to stake.
Mm.
Other token blockchains like Algorand or Cardano, not necessarily. So you mentioned that you're not part of the counterparty, you're just providing the buttons and the pathway. So is it going to like public decentralized pools, the staking versus Abra staking it in a pool?
Yeah, so it depends on the asset. In some cases, the user will go directly to an on-chain service provider that we basically disclose for them. In some cases, it's a yield generating service like a DEX or like a GMX or something like that, depending upon where the opportunities are. In some cases, you're just straight staking. And that's always disclosed. So there's not like, oh, we're just generating yield. No, you actually know it's your investment, right? It's not Abra like just arbitrarily deciding what's the best place for you to get yield today. It doesn't work that way anymore. And so you always see which yield opportunity you're getting. Is it straight staking? Am I, borrowing and lending into from a DEX? What's going on? And I have the option to choose that. And I can give Abra discretion to make those decisions, but the decisions are transparent, and what I'm getting is transparent, and the risk disclosures that are required, by the regulators are there as well, which I would posit. I would go on podcasts and talk about the risks in the last kind of model, but now like legally they're laid out very clear, stark terms.
Hmm. Bill, a tough question for you. Do you think this is what the future of staking looks like? Because what you're saying makes sense. At some point, we're going to have to meet in the middle of the road with these regulators because they're fighting, right? We're going to talk a bit about the SEC and so forth, but what are your thoughts on that?
So, look, does the average web user know what HTTP is and how it works? Does the average Netflix watcher know what RTP, real-time streaming protocol, is and how it works? No, they shouldn't have to. And I think DeFi protocols are the future of banking, and the average user won't know how they work. The average money market account holder doesn't know what a reverse repo is or why money market rates are affected by repos and things like this. And I think banking is going to become decentralized, borderless, always on, and very efficient. right? The rates that DeFi sets are true market rates because it's a marketplace based upon supply and demand. It's not a bunch of old white men sitting around a table deciding what interest rates should be arbitrarily to, grow and shrink an economy. That's nonsense.
Mm.
And that's an antiquated 1800s concept that doesn't work in an always on internet world anymore. And watch what happens to crypto when Israel and Iran are fighting over the weekend, when the markets are open 24/7 and the ETFs can't play
Yeah.
because they're only open 30 hours a week, tradable 30 hours a week. So DeFi is the future. Whether the existing banks are in a position to embrace that and become part of the future, or whether they become blockbuster and go away in favor of the Netflix of banking remains to be seen. My bet is in 20 years, most of them are gone
Mm.
and they're replaced by internet native, DeFi native banks who will be some of the biggest companies in the world that don't exist today. Just
Wow.
like Netflix didn't exist 20, whenever it was started 20 plus years ago, or Google or whoever. These companies didn't exist in the early 90s. And they're $1 trillion businesses now.
Mm.
That's going to happen to banking. And so it's not really that hard of a question. It's just I'm not 100% sure what the path is,
Mm.
but there's no way you can create let me start over. There's no way you can create a 24/7 always on banking investing infrastructure for the public that is, super competitive, hyper competitive, globally accessible, and not have that be the future versus the monolithic, you know, open 30-hour week run by white men in a closet system that has pervaded, banking for the last 100 years. The choice is clear. The path forward is clear. It's just what's not clear is, okay, do the existing banks play or do they just go away and die and wither like Blockbusters and Kodaks?
Mm. Yeah, so to your point, in the short term, there could be maybe a merge of CeFi, DeFi, kind of like what you're doing, but eventually it morphs 10 years from now, it's more fully DeFi.
Yeah. Yeah, I think CeFi ultimately becomes about packaging,
Mm.
user experience, advisory, navigation, and less about, you know, counterparty risk,
Mm.
which is, we have this FDIC insurance to deal with the fact that there's over leverage by design in the banking system
Mm.
where everybody has counterparty risk to the banks and the government, but the FDIC represents, the ability to cover 1% of deposits, where most banks basically are, if you actually value their long dated bonds using mark to market standards that everybody else has to use, the FDIC is in deep shit. And so what do you want long term? Do you want a system where you don't have that counterparty risk, whether it's to a crypto company or bank? Or do you want to keep the system where, the government is going to have to print eventually trillions of dollars to bail out the banks? So
Yeah. Um, Question for you on the SEC at a federal level versus state level. Are they in alignment with staking and all the different things, or have you noticed any differences in your, working with different states as well as getting the approvals from the SEC?
I, I haven't had a lot of discussions, nor have my lawyers on the states on their opinion on this because federal law trumps state law, is my understanding, and I'm not a lawyer, so that's just kind of Bill's rudimentary perspective on this. Is federal law generally trumps state law when there's two, when there's two sets of rules, federal comes first. So at that point, state opinion on what is a security offering and what's not, I think, becomes a secondary issue. Um, and in terms of how the SEC views this, my understanding is that when you're an RIA and you're committed to the separately managed account model and you follow the qualified custody rules, they have to let you do what you're doing,
Mm.
right? So as long as you follow those rules, it's more of an approval process as opposed to a licensing process. It's just very hard when you're doing DeFi to follow those rules. And so that's why I think we're the first to do it. But I don't think as it relates to advisory services, the SEC cares that much as long as you follow the rules. And if you
Got it.
don't, then they care a lot.
How does the current agenda of the SEC to categorize certain altcoins, many of which are proof of stake, like there's reports that they're going after Ethereum. Obviously, they listed Algorand and Cardano and Solana and so forth in different lawsuits. If they classify those as securities, does it affect the staking? Have they mentioned anything like that to you guys?
No, no, it doesn't. Just because again, the separately managed account can hold commodities, it can hold securities, it doesn't matter, bonds, whatever. Look, I have very strong opinions on this topic as it relates to what's a security, what's not. Doesn't matter. I mean, if you want to get into it, have fun. Sure, happy to share my opinion, which I'm guessing you can guess. Um, but as it relates to our business, I don't think it matters.
Mm. It's fascinating, Bill. They're just so, and it's so interesting because I see almost like this is the way forward because I don't know how this battle ends because you got Congress has to act, but will they act is a question because politics comes into play. Um, and then it seems like I don't know if you agree with me here, but there's a clear agenda to slow down crypto startups while Wall Street is grabbing up ETFs, doing tokenization, custodying funds for certain crypto companies.
Yeah.
So where does this end? Do
Right.
you see it needs to go to Supreme Court? Congress needs to act. What do you think?
Right. So let's remind everyone how because your questions have been very U.S. centric. Let's remind everyone how the U.S. system is supposed to work. We have three branches of government, not four. The three branches of government are the executive, legislative, and judicial branch. Now, in our world, it feels like there's four, and the fourth being the regulatory branch. There's
Mm,
no such thing as the regulatory branch of government. It's a made-up idea. Okay. The regulators report to one of those branches, depending upon what the law says and how they were created. Okay. And three branches of government, executive, legislative, and judicial, are meant to have extreme checks and balances so that there's no concentration of power within those branches of government. And that's been the beauty of the American system for 230 years, is that we have avoided, I would say up until 20 years ago, and it's significantly changed in the last 20 years. Up until 20 years ago, we avoided the significant layers of corruption that have invaded, I would say, other well-intentioned systems over hundreds of years because of these checks and balances.
mm,
About 20 years ago, for whatever reason, right, the regulatory capture model of business in the United States took root. The regulatory capture model basically says companies that are in a position to take advantage of the system work the regulators, work their network of lobbyists and whatever, can create regulatory models that give their business a competitive advantage. Then we refer to this in Silicon Valley as regulatory capture, and it's it's not an opinion, it's a fact. There's all kinds of businesses that take advantage of this, and I get it. I get why VCs want that. Okay, but the reality is that it's an abuse of the system because most of the public doesn't understand what regulators do, what they're supposed to do, and the fact that they're basically there to implement laws. They're not there to create laws. They're really not even there to interpret laws. They're there to implement the letter of the laws that are passed. And the checks and balances that exist between legislative branch, executive branch, and judicial branch are meant to deal with the nuances of interpretation, differences of opinion, et cetera, et cetera. So now back to your question. My humble opinion is that we are not in a position to deal with this regulatory capture issue head on, right? In any branch of government right now, whether it's Food and Drug Administration, look at what happened during COVID. Uh, FAA, look at what's happening with Boeing. Um, Financial services, where the Warren camp is on a one woman mission to kill our industry, using the SEC and the FDIC and the OCC and you know FinCEN and what other arms she can use to
mm,
basically work around the checks and balances of you know, the three monolithic organizations that run our government. And so unfortunately, that means we're going to be dependent upon the checks and balances, which means the courts,
mm,
right? Until somehow we can change that regulatory capture model, and sorry for this long tirade, but others have written about this. Ray Dalio in his latest book on the principles of a changing world order, The Fourth Turning is Here by How, which is a great book, or the original Fourth Turning book. They describe late stage empires, and the things that we're going through are very clear. And we didn't invent this. This has happened over and over again in late stage empires that can't get out of their own way. And unfortunately, that's the position we find ourselves in right now. But history has left so many clues that we are in a position to deal with this if we can just get our heads out of our asses and recognize that we're creating this problem for ourselves. And we have, I mean, over the last 20 years, that we have created this problem for ourselves because, we did have some issues in the 90s. When I was at Netscape, I remember it was a little, we had the export version of the web browser that we couldn't export because of munitions grade cryptography laws that go back to World War II. But that was the exception.
Hmm.
You didn't sit in a room and make every decision with this, oh my God, what are the regulators going to say? Now it doesn't matter what industry you're in.
Hmm.
It's a significant part of the discussion, and it's crazy. We're the only country in the world that I do business in that's not communist or dictator based, where we're having this discussion. And when I talk about crypto to people in Dubai and Singapore and places where they feel free to do business, they think we're nuts. You've all lost the plot. What is going on over there? That's the basic kind of like narrative that I get back from people who aren't American. And they said, you all had the power. Why are you punting it away like a football or a rugby ball? It makes no sense. And I don't have a good answer for that, other than what I've just said, which is, unfortunately, this is historically what happens when you go from a good checks and balances system to a regulatory capture model that we find ourselves in today.
So, Bill, do you think that part of it is generational, that the Elizabeth Warren generation will eventually pass away and there'll be a changing of the guard? And as blockchain technology becomes more prominent, there's better iterations and people being able to use DeFi, like we've been talking about, and can be their own bank, so to speak, right? The convergence of these different factors would, we can at least fix some of this, and maybe an example would be for voting, it goes on the blockchain, and campaign donations, these things are more transparent. And instead of raising from corporations, you're raising from people. It's on the blockchain, it's verifiable. I know I'm spitballing here a lot, but do these things help to solve some of the problems that we have?
They clearly solve the problems. The question is, is it going to happen regardless of our stupid decisions, or are we going to kill ourselves in the process? So, and I keep referring to us as the U.S. So I'm convinced that what you're saying is going to happen in places like Africa, parts of the Middle East, Southeast Asia, like Singapore, Indonesia, where they don't have the baggage that I'm talking about in terms of our regulatory capture model to get in their way,
Mm.
other than maybe the politics of having their partnership with the US be heard in some way. But long term, I don't think that's going to matter, right? Dubai was a fishing village 50 years ago, and
Yeah.
they have a better chance of becoming the financial center of the world in 25 years, in my opinion, than New York does, given the momentum. Now, that sounds crazy to people in New York right now, but they're looking at the ground from 5 feet. I'm looking at the ground from 5,000 feet, going, this is where the momentum is going, and you don't get it, right? And so the world is going to do what it's going to do. The question is, what role are we going to play in the future financial system? And are we going to be, is the dollar hegemony going to continue from a place of strength? Or is its value just going to keep getting eroded, and not matter at some point in 25, 30, 40, 50 years? I don't know the answer to that. I know what I would like the answer to be, but a lot of things have to change for what I would like the answer to be to happen.
So on the dollar, right? We know it's the world reserve currency, but there's other countries, BRICS countries and so forth, which are challenging that. I guess this is a tough question, but part one of it is if we get stablecoin regulations right, because we see the world really wants US dollar backed stablecoins, USDC, Tether, whatever it is. And then second, is it a digital dollar CBDC that's coming, which has its own baggage and problems, potential problems, which can be dystopian? Is that also a solution?
Okay, they're two different issues, right? So the dollar as the world reserve currency has its own set of issues which have nothing to do with technology. It has to do with the fact that we switched from a commodity-based currency in the early 70s to fiat, which basically, fiat basically means, managed by government decree. And so in other words, the government decides to tell us that this money has value and therefore it has value, as opposed to post Bretton Woods when the money had value because there was a certain amount of gold in the banks in Fort Knox that represented the value of the money. And so I don't think the world is going to accept that for another 50 years. I
Hmm.
just don't, right? Because the military industrial complex, the bargain of that is eroding quickly. People don't trust us anymore, to cut to the chase. And it's not that I don't want that to happen. It doesn't really matter what I want. It just is, right? So can we reverse that? It's possible, but given our debt structure and the rate at which the interest is rolling over into principal on the debt now, it's very unlikely. I mean, we would have to absorb a solid 20 years of pain as a society to undo that I don't think we're willing to absorb or even fully understand the level of the problem we've created and the fact that it's now become a hockey stick in terms of the rate of change of the problem and the increase of the problem. And so I think the dollar's days are numbered as a world reserve currency in that regard. I think that there will be competing reserve currencies over time. And I think different factions will create different reserve currencies. And it's simply a function of this problem that we created, which has been there for 50 years. It's just, wasn't acute until now, and it's becoming acute. And so there's no stablecoin rules or central bank digital currency rules that are going to fix that, right? You can make the dollar a stream of ones and zeros. Doesn't prevent you from printing another 25% of the float. And so now, in the short term, do I think that having stablecoin legislation and making a kind of network of competing stablecoins is a good thing for America and the world? Absolutely. I think there should be 1,000 stablecoin issuers all competing with each other and let the good ones win and survive and flourish. I think having the government basically create a world monitor coin, which is what a CBDC probably is a really bad idea.
Yeah.
And it scares the hell out of me, right? It's like every dystopian nightmare that I've ever read about kind of all rolled into one. And so, is it possible to create a central bank digital currency that isn't a monitor via Big Brother token? It is, but it's unlikely. And so I think a stable coin set of rules that creates competition at both the state and federal level is very interesting to me.
Hmm.
Doesn't solve the long-term structural issues,
Right.
but it definitely helps from a short-term technology adoption perspective.
So in the long-term issue that we're facing, right, that we're heading down the path of, let's say, Argentina or Venezuela or something like that, is there any hope that maybe blockchain tech and maybe even Bitcoin as a truly hard asset that's finite, and it could be the future generation's gold, right? And Bretton Woods, I don't know, what are we up to? Two, three? Uh, but the central banks could go to that model. And like you said, it may not happen, and there's a lot of pain ahead to do fix some of these problems. But could they do that?
Of course, but again, the problem is we don't have a technology problem,
Hmm.
right? We have uh, a governing by decree problem when it comes to money, which is what fiat is, right? So if we change the system back to be either gold based or commodities based, even eventually partially Bitcoin based or whatever, that would solve the problem long term. It would require massive pain in the short term
Hmm.
because of the debt load, the debt burden. We would have to stop investing in other things in order to pay off the debt because you can't print money anymore, right? Um, and so are we willing to absorb that pain? That is, again, I'm sorry to keep saying this, that is not a technology problem. It's a
Hmm.
mindset problem. It's a belief problem. Um, I've seen these clips of the Bill Maher types lately that have been talking about how Bitcoin is a Ponzi scheme, and I just sit there, I go, oh my God, the government has been running this overt Ponzi scheme in front of your face
Yeah.
for 50 years, and you're calling the tech that works and that creates a new monetary system the Ponzi scheme. It's literally the opposite of what you're saying. And that's what we're up against, right?
It's
Is the
funny.
talking heads that don't understand because they don't understand how money works in the first place. So if you don't understand how money works in the first place, how in God's name are you going to understand that what we've built to fix it actually fixes it because you don't even believe that it's broken?
Right. Funny. It's funny, Bill. And as you're stating that, I've been talking to people about that at like what the U.S. government does and the whole borrowing and lending, Treasury and Fed and all that. It's one giant Ponzi. And then I realized that some of these talking heads, are they just distracting us from that? That's why they don't teach us about how money works in school.
No, I don't. You're giving him too much credit. I think the monetary system is a boiling frog. You put a frog in cold water and you turn the heat on, it
Mm,
doesn't know it's dying.
mm,
And I think the monetary system is a boiling frog. And we're all in the water. And a few of us that focus on the monetary system, that deal with the tech, that understand the intersection of the tech and capital markets and decentralization and Balaji's network state ideas and Satoshi, his white paper, we get it. And yes, there's a chance that we don't have it 100% right and that we are wrong in many ways. But I think when it comes to the basics, I don't think we are.
mm,
Okay. But for everybody else, they're like a frog being boiled in a vat of water
mm. Um,
slowly.
Bill, you've been in Bitcoin, well, you knew of Bitcoin for a very long time. I saw your TED Talk and everything. You've been here a long time. I would love to get your perspective on the spot ETFs and how significant that was for the market. What are your thoughts on the performance and outlook for the rest of the year?
I think, what do I think about this? So I think a couple of things. One, I think having BlackRock and other institutions, major institutions, market Bitcoin to the public is great,
Mm,
right? It just creates awareness. Why is BlackRock interested in this? That's the question that a lot of people are asking. It's good. That's good, right? Is an ETF the best way to have an insurance policy on everything we're talking about? I don't think so.
mm,
But again, who cares, right? It's just Bill talking. So marketing value, love it. It certainly helps Abra because our high net worth clients in Abra Private, right? Once they dig in, an SMA account that's accessible 144 hours a week is significantly better. Not only can I hold other assets beside Bitcoin, but it's significantly better than an ETF that trades 30 hours a week or 35 hours a week, whatever it is. And it was like I said before, that was very acute when Iran was sending drones and planes to Israel a few weeks ago, and the Bitcoin price fell, which it recovered. But if you wanted to do something about it during that time frame, you couldn't because the banks and the stock markets were closed. And so that's not the way the markets are supposed to work. Bitcoin as an asset doesn't mesh well with the existing banking system.
mm,
It's its own matrix. And the ETFs are trying to build a hard line into the matrix. And that can take you so far. It creates awareness for the matrix, but it doesn't put you fully inside the matrix. You
mm,
want to be inside the matrix, you use Bitcoin the way it was intended. The SMA model, gets you like very, very close because they're your assets, right? You have title to your assets still, regardless of what happens to Abra. So again, great marketing tool, helping us tremendously. Obviously, the price narrative, fine. I hope Bitcoin, hope it goes to Valhalla. That's fine. But I care just as much about the system as I do about the price. And the ETF is good marketing for the system, but it doesn't represent the system.
mm. Yeah, I have this similar feelings, love-hate relationship. I see it as a kind of a Trojan horse almost because I
Yeah.
believe in self-custody. I do self-custody majority of my crypto, Bitcoin, of course. But is it, you know, I always think in the back of my mind because I know human beings we're the same psychology and emotions and things play out. It could be decades, generations. Could they confiscate Bitcoin now easily because of that? Because you put it all in an ETF. And two, are they going to do the same leverage bullshit on top of Bitcoin now because they have it there and a majority of capital's coming in like they did with real estate and who knows what happens in the future?
Right. Yeah, I agree. I agree. We don't know. Again, I think the operative point here is that Bitcoin itself, and Caitlin Long has been the master of making this point for 5 or 6 years. Bitcoin itself doesn't mesh well with the traditional banking system. You have settlement issues, you have timing issues, you have banks are closed issues, you have leverage issues. Banks can leverage themselves significantly. Well, Bitcoin and rehypothecation don't really mix very well,
Mm,
right? It is possible to generate a relatively safe DeFi yield on Bitcoin today, right? I think there's been times this year where you can make 7, 8, 9% on the carry trade. The long-term yield on Bitcoin is zero,
mm,
right? So that's an issue because the natural yield on a deflationary asset at scale is zero.
mm,
Um, and it's simply a trade of productivity for Bitcoin at that point. Whether I'm mining or I'm working and you're paying me in Bitcoin, or I'm giving you goods and you're paying me in Bitcoin, right? And you may have a return on equity for your business, uh, but the natural yield on holding the asset should be zero. So anyway, my point is that the two systems don't mix well,
mm,
and people should be thinking about Bitcoin as an insurance policy on government run amok, and not, oh, let's integrate Bitcoin into the banking system. Mm, Bitcoin is pristine collateral for lending, but I don't think it's going to be banks that own that market,
mm.
right? I think
Um,
it's going to be companies like Abra that help people borrow via DeFi so that you can avoid the trials and tribulations of having to know how DeFi works in detail,
right.
right? And still safely borrow without having to take counterparty risk to a bank or to Abra for that matter. And that's the future of lending, right? You have this pristine collateral that trades 24/7, where you don't have to worry about somebody's credit score because the DeFi network is holding the collateral.
Mm. I want to get your thoughts on the Ethereum Spot ETF because there's a race for that as well, but there's complications going back to what we were talking about before, the SEC seemingly trying to categorize as security in addition to other blockchains and tokens. Do you think we see that approval this cycle or this thing goes to the courts again?
Yeah, I think it goes to the courts again, but I think there's two different issues. I think whether the ETH is a security shouldn't matter, because obviously there can be ETFs of other securities. Happens all the time. I don't think ETH is a security, but that's irrelevant. But I do think it goes to the court just because they'll drag their feet and they want to delay it as long as possible. And the logical outcome is the court. But given the precedents that have been set, I would suspect that they would lose again, and we'll have our ETF. Now, whether that takes 9 months or 18 months at this point, I don't know. But and I'm trying not to be pessimistic or sarcastic about it. I think I do genuinely believe that this is headed to court again, and I don't see any reason why the outcome would be any different. Staking makes no difference in the day. It's
Hmm,
just another consensus algorithm. So
right. Um, with regards to Ethereum, we saw BlackRock is tokenizing bonds, well, excuse me, funds and so forth. And there's a big move for tokenization, taking real estate, taking stocks, bonds, and all these things, putting it on the blockchain. What are your thoughts on that? And is Abra exploring any of these opportunities as well?
so I love it. I'll give you two reasons why I think it's interesting. Tokenization of real world assets, I think, is interesting for two reasons, at least to me. One, it creates fungibility across asset types. I can trade Bitcoin for real estate. And two, it basically, well, it's kind of related to one. It creates fungibility for trading, and two, it creates fungibility for lending, because now you can basically collateralize everything easily and have a single lending network that was traditionally accessible to the wealthy. So in other words, prime businesses at Goldman and Morgan Stanley, like, and those desks, they would traditionally lend against equities to the wealthy.
Hmm.
Now, Robinhood doesn't do that. They don't pay you interest on your equity holdings while they're lending them out, right? But with tokenized assets, everyone can play in that world, right? You can stake your collateral on a DEX, whether it's real estate or stocks or whatever, and you can earn a yield on that collateral. Or you can borrow against that collateral. And you've got a normalized, interoperable way to do that across all asset types. And it creates tremendous liquidity opportunities that don't easily exist today, right? Because you can get liquidity in gold, a yacht, real estate, stocks, Bitcoin, whatever, in homes, like, where you have complicated HELOC processes, and it's all fungible in some way. That's where I think this is headed. Not there yet, but I think that's why companies like BlackRock are interested in this, because it unlocks a tremendous amount of liquidity in trillions of dollars in assets.
Hmm. Um, are are you guys trying to do anything on your end, or you're just watching right now? And then
Well,
I can't say.
stablecoins are a form of real world asset. I would actually posit Bitcoin has become a real world asset insofar that it's a digital physical asset you can hold that you can borrow against. What's too early is other stuff, you know, real estate, other assets. We're interested in it. It's unclear to us how DeFi markets will evolve, but I do think it's going to happen this cycle. And I think it's going to happen outside the US first for all the reasons that we've been discussing.
Hmm.
Um, and we'll figure out what our clients want and how they can take advantage of it when it's ready.
I want to get your thoughts on meme coins. And not that I want your meme coin picks, but just the speculation and human psychology here, because you've been here since the dot-com boom and bust, right? And seeing speculative bubbles. What are your thoughts on meme coins and how human beings are interacting? It seems, it started with AMC, GameStop. Now it's much greater with tokens.
Yeah. So when I was at Netscape, there was this animated GIF of I don't know if it was an animated GIF, but it was a video. I think it played me an animated GIF of this thing called the dancing baby. Do you
Hmm.
know what the dancing baby
Yeah,
was?
I remember that.
Okay. There was in around 2000, I think, when Bush was running against Kerry, this company called Jib Jab that
Yes.
made videos.
Yeah.
Okay. Um, where I'm going with this is that we've had these kind of memes that were culturally relevant for decades now. What's interesting about Web3 is you can own a piece of it,
Hmm.
right? And I'm fascinated by that. I've never been the person who was closest to pop culture. Like, you wouldn't come to Bill and say, Bill, where do you think pop culture is going to go in 4 years? You'd have to be a moron to come to Bill to want to learn where pop culture is going in 4 years. That having been said, I've come to realize that there's these patterns in pop culture as it relates to memes vis-a-vis the internet that we've had since Dancing Baby through Jib Jab through Pepe and Bonk and Doge and um, Whiff and Mew and whatever. I think it's fascinating. Now, I also, as part of Abra, we run a token fund for altcoins, and it's small but growing. It's done very well the last few months, and it's got a small exposure to meme coins, and that exposure has grown way faster than our exposure to well-performing tokens. And it's not an irresponsible exposure, but I think the couple of percent grew to 10%, and we're pretty bullish on it. And so, look, I think it's very interesting, this idea that you can participate in internet-based pop culture, own a piece of it, the same way that my now grown kids collected Pokemon cards.
Hmm.
There was one they wanted that they didn't get in the packs they were buying. They could go on eBay and buy it,
Hmm.
right? Well, if you want to own, you know, Whiff or whatever it's called, Dog with Hat, because you think that, it's going to be on the Sphere when they raise $300,000 or how much they raise to do it, go buy it, right? Just to me, it's no different than being able to buy that Pokemon card off of eBay, except now it's easily accessible 24/7 globally, which is pretty damn amazing. And it's also showing us in an inadvertent backdoor way that this is a relevant means of understanding how the banking system in the future is going to work. You
Hmm.
were asking about tokenized assets. Well, here's tokenized non-real world assets, memes that we made up. They're not securities and they're tradable 24/7. To some degree, they represent pop culture and other things. I was following Bonk pretty closely late last year. Um, we put a little tiny amount in the fund, which grew a lot. And they had this 12 days of Bonkmas and all this crazy stuff that I thought was very engaging, you know. And again, do I think it's going to change the world the way Bitcoin is changing money? No, but it's changing the world in a different way,
Yeah.
where it captures people's imagination around pop culture in a way where you can actively participate. It's
Mhm.
not just gambling, it's more than that. And I think if you just look at this as stupid gambling, you're missing the bigger picture. You're missing the point. Um, and that's why I start with this example of, I'm an older guy, so I start with this example of dancing babies from the 90s, because we didn't invent memes in the last 3 years, but we've been able to put value on memes for people, and I think Chris Dixon talks about this in his book, Read, Write, Own, and we can own a piece of that meme culture now.
Yeah, it's a great, great point. And I've been thinking a lot about this because initially I had the knee-jerk reaction of meme coins. This is all bullshit. Like, what is this? But then I realized it's culture on the blockchain. It's just human beings
Right.
tokenizing their ideas and their humor
100%.
and whatever. And I was young, back in 2000s. I was in high school. I graduated in 2001, but I remember all these things, and I remember Jib Jab and me and my friends laughing at the different stuff on there. But now, like you said, this time around, I'm older, I can participate. I can actually have equity and be part of a movement and get rewarded for that. So it's pretty incredible. I know we're coming up on time. I do want to ask you about what are you most excited about for the future of crypto? There's obviously a lot of hurdles, right? We talked about it, but what are you most excited about?
Look, I think the future here is decentralized. I think the pendulum towards monolithic, centralized power bases is has reached its zenith, at least as it relates to the West. We'll see what happens in China. And I think this movement towards decentralization is super early, starting with crypto, and I think it's going to make its way to AI and other things. Um, and I'm bullish on it,
Mhm.
right? I think we need the checks and balances in the system that transcend governments, because right now we have this kind of fourth leg of government that wasn't meant to be in the US and in the West. And we need a check against that fourth leg's um, unchallenged power. And I think decentralized systems gives power to the people where it belongs. And I'm super bullish on it.
Bill, always a pleasure. I'm really excited for the future updates around Abra. I think you guys are doing something incredible, and what I potentially see as the meeting in the middle of the road with the regulators, but we'll have to wait and see. But thank you so much for joining me.
Yep. Good to see you. Thanks for having me.